And it is Friday Fun Day, and we've got our regulars here today. Tackle Trading's halftime report. Welcome out to our live shows. Where every day we cover the stock market, commodity market, what's in the news, break down the charts, have some fun while we're doing it. But it's always a good time when you're here, Frank. How are you doing, my friend?
Doing great. Thank you very much. Always fun to be here. I always look forward to Fridays, getting to hang out with the crew. It's always one of the highlights of my week. So always happy to be here.
See, Mark, why can't you be more like Frank? I mean, I offer him pleasantries, and he's always very polite, and he's just having a good time.
But you don't care if Frank's having a good day.
That's not true. I believe that you do, Tim.
I do. And Mark, how are you doing today on this Friday heading into the
Listen,
weekend?
Frank could have said, half my family members are dead. I am thinking about ending it all myself. And you would have said, well, that's good to hear, Frank. You know, it's good to hear that.
Yeah.
He would have been thinking about the other half that weren't dead. See,
Sure.
he's an optimist.
Yeah. Cody, how are you, my friend? Cody's on mute in the background.
I am struggling with the little one right now.
Multitasking while you're working from home, handling a young baby boy. I'm sure it's a lot of work. Are you getting any bit kind of stressed out, extended? You feel exhausted yet?
Not at all. You got to keep a cool head, and that's what I'm doing.
How old is the baby boy?
The 30th when he was born, so 3 weeks now.
3 weeks. At some point, that exhaustion will kick in. Don't ever feel bad about it. You know, take a little time and ask for some help. But you and the wife are handling this. You're on shifts, is that right? You've got the morning shift.
Yeah, we got a shift going where she'll take up until 3 in the morning, and then I'll take from 3 until I leave and walk out the door for work.
Mm-hmm. Yeah, interesting and good times. And that baby boy with all that hair just does make me happy, Frank. Yeah, you mentioned it earlier.
It is an impressive mane of hair. I hope that he never.
He does indeed have a full head of hair. It's quite amazing.
It's impressive.
It is really impressive. All right, let's talk charts before we talk news here, guys.
Real quick on that. Apparently, there's an old wives' tale that if during pregnancy the woman has really bad acid reflux, it means that the baby's supposed to have a full head of hair, and that rings true here. Kelsey was going through bottles of Tums, like probably half a bottle a week.
Mm-hmm.
She was going through those Tums like nothing, like candy.
You know, out of my 3 kids, I was talking about it, Cody. His head of hair reminds me of my second child, Sammy's head of hair when she was born. She had this real dark, thick hair. It lasted for a while. Eventually, it lightened up, though. So it'll be interesting to watch that young man and how that head of hair holds, Frank.
Well,
you never know.
As dark as mine, it's not lightening up, but we'll see.
But your wife has lighter hair than that.
Yeah, she does. She's got light hair.
Yeah. All right. Let's break down the markets here, guys. Market gapped out on the futures market overnight on the anticipation and hopes of basically this reopening of the economy. We'll talk about what those phases are, what's happening on the federal level, the state level here in just a minute, and what the anticipation is. But let's start with the chart itself. I mean, it is probably not coincidence, Mark. We gapped into the falling 20-day moving average, hit its head instantly and has failed to run from there. Mark, what are you reading in these charts right now?
Well, the bulls are in control. Support levels on sell-offs have held. Any news, like it wasn't just the reopening. That wasn't even the big catalyst. It was the report on the drug trial out of Gilead that really got the market ramping after hours. That was the really huge catalyst. It wasn't the opening itself. So like all support levels are holding. Any positive news, I mean, you look at the news this week, economic data doesn't matter, contracting GDP doesn't matter, jobless doesn't matter. Any bullish news though, boom. And I mean, the bulls have been in control for weeks now. You know, I have my real doubts but we'll get to that in a few minutes. But from a technical sentiment level, support levels hold. Mm-hmm. News is bought up. I mean, bulls in control in the short term, and it's been that way for several weeks now.
Mm-hmm. Frank, you are famously a chartist first. I mean, that's what you look at. Obviously, you do track the news. You're on Twitter. You're around us a lot, but you really rely on the charts. What are you seeing here in the S&P on the chart if you just read the chart alone?
We're in an interesting spot. When we broke out of the failed bear retracement last week, I mean, I think the most likely outcome is exactly what we've seen. You know, we beat the bears, right? Well, the bulls beat the bears, breaking through that retracement as we broke resistance, and really just nothing of any significance until that 50-day moving average. Obviously, that's a big one, right? On the you know, and it's not just on the S&P, it's on lots of things. But this is a battle right now. This is kind of where that line in the sand is. If I'm looking to sell, whether it's as a bull, you know, obviously I need some signals for a bear. This would make sense, right? This is a battle at this point, as far as I'm concerned. Filled up that space pretty easily, like Mark said. Right now, the bulls, you know, on the intraday are very, very much in control. I'm interested in seeing how we respond on the next wave of selling, you know, which to me right now would look more like a pullback, at least as it is right now, than a bearish signal. Because of our higher highs and our higher lows. So I'm really interested in seeing how the market holds up when we do actually get some legitimate profit taking, take out that weekly floor that we've developed, see if we work into that trend line, that old resistance. That's what I'm watching for.
Yeah. And let me do a quick straw poll with our audience out there. And I'm just going to ask a very simple question. At this point in the market, are you bull, bear, or neutral? You know, and I'm not going to give you a timeline. I'm not talking swing trading, position trading, investing. Just if you had to answer the question right now, are you bull, bear, neutral? Pop it in the chat. Let me know if you have an opinion on it right now. It's really interesting because I feel like the FOMO is more real today than I might have ever seen, Mark, in my opinion. And I don't know if it's the fear of missing out on the profit. I think a lot of investors have fear of making a mistake right now, and that mistake might be in cash in some of their estimations. I read a report from the Federal Reserve, actually, who did a poll of all of households 12 months out on whether they thought the market would be higher or lower from here. And the highest number of respondents in 10 years answered they thought the market was going to be higher. The average person out there, there's a lot of mixed opinions, but I think the word on the street, even in the face of fear, I think a lot of Americans, a lot of people, a lot of investors think the markets are going to go up. You know, how do you interpret that, Mark? Is that a good thing for the bulls? Does that create more of this rally? I mean, how do you read that information?
That should scare the living hell out of anyone who actually wants to buy stocks today. Listen, I get FOMO. I mean, I've been around for a while. You know, I've seen investors go through FOMO stages. There are certainly times when that is justified. It's hilarious to me. The simplicity, once again, legal disclaimer, I'm in the bull camp, but the price action you've seen these days, I mean, look at the volume on this rally. Look at the volume this week. This is not an impressive rally, to say the least, from a volume standpoint. This is not an impressive rally when you look at what hedge funds are doing in moving out. Smart money, I believe, is getting out, and naive and quantitative money is getting in. And this is what should scare any bull in the short term. Those computers can flip a switch pretty quick. Definitely, and this is what you've seen on the support level bounces. Support is held. This has been going on for 3 weeks. That intraday, that multi-day support, all kinds of quantitative buying has occurred at places we would expect it to occur. A quant-driven rally, which I really believe this is, and it can suck some average Joes and average Janes into the rally, but this quant-driven rally, if it flips and those quants turn bearish, if those signals turn sell, well, let's just say if your investing horizon is long-term, you better be willing to buy at these price levels and hold for years, potentially, because 3 weeks from now, 6 weeks from now, if the market's lower and then all of a sudden you're scared and you're like, well, now I need to sell. Well, you're basically being the worst type of investor you can. You're the buy high, sell low, and that just will destroy you long term.
That's an interesting plan. That's a really interesting way to put it, Mark, because the simple truth is if I'm in or if I'm buying today, don't I kind of have to be willing to sit through a pullback to get any information? If this is down 3, 4, 5% going into next week, it's still going, to not have changed this short-term trend, right? And so that's where, you know, that risk analysis is going to come into play, right? And it doesn't have to be all or nothing. I mean, why can't I just go take one trade? Why can't I just go play one breakout or play, you know, I don't have to make this life-altering decision. I don't know if I should, you know, be a super bull or a super bear right now, but maybe I'll play a breakout, you know, on Zoom if it happens, or
Well,
whatever
yeah,
the stock might be.
and trading's one thing, right? Like, you know, I'm talking from an investing standpoint, but I think your advice, even for investors, is wise. That if you just can't take it anymore, and just say, no, I've bought in. I've bought into the bullish argument. Things are going to be better one day. We're going to get a control of the virus, and I just can't take it anymore. Because once again, getting control of the virus, modern medicine eventually winning. I mean, that's part, the Fed and the federal government intervening. That is why I'm in the bull camp. I'm in the bull camp for all of those reasons. It all then becomes a matter of how do you play it? What are your entry points? How am I going to, with that bullish thesis, and not a Timmy the Bear thesis, because Tim would say you're all idiots, but how am I going to play it? And if you just can't take it anymore, take Frank's advice and say, I'm going to give a little bit. I'm going to
But here, let me clarify one thing real quick, because even with my bear thesis, I mean, the market can go to 3,000, 3,200, or 3,400. It doesn't change.
The market could go to 4,000.
That doesn't change my bear thesis personally. The only thing that's going to change my bear thesis personally is when jobs come back and consumer behavior resumes, and when we have a successful reopening of the economy. I cannot map out, guys. I did some math. I was trying. Everybody's doing guesswork right now on the fundamentals. I was trying to do a forward 12-month PE ratio based on current earnings estimates on the S&P 500 mark, and based on earnings coming in about 120. That's all the strong companies doing fine, like the Amazons, Walmarts, Procter and Gamble's, and all of the pressure in like the energy and everything. That is a 30% drop in earnings. Okay. And those are some conservative estimates I've seen across many, many firms. If we get a 30% drop in earnings at the current price on the market at 2,800, that means we have a forward PE ratio of somewhere between 25 and 30 today, Mark. Today. Okay. So you're not getting a discount just because the price is 600 points below where it was 2 months ago. That's not mathematically what's happening. You're paying a higher price today than you did in January or February based on earnings. The only bull argument that could refute that, in my opinion, is a simple thing. Well, that's all crazy. Don't worry about 2020. Let's focus on 2021. All the stimulus money and all the government money is going to get through this bridge, and we'll get back to the economy at some point, which I think is foolhardy and based on hope. And
let's be honest, you better not focus on 2021. You better focus on 2022. Yeah. Like it is really, the bullish argument is a very simple one, the uber bullish argument. It is, and to some level, I buy into it, right? It is, things are going to get better one day. Federal money's there. Medical science will win this. We'll get control of the virus. And so your horizon is this one day horizon. It's just, what price are you willing to pay for that? Like, you know, and right, like, listen, I am just really, really, really fearful of a quant turn. You know, those computers have, in this low volume week, in relatively lower volumes compared to the sell-off, it hasn't had a lot of conviction.
I don't believe smart money is buying up here, but somebody is, you know, and somebody's bullshit. It doesn't mean that it won't come in, Frank. I mean, the market can break up from here. It can continue moving higher.
Sure, absolutely.
You know, the outcome is not pre-planned or predetermined. We don't know what the outcome will be in investing. All we have is the current information. By the way, go down to a 5-minute chart if you can here, Cody. I want to talk about last night's futures market, just between like the market close. Look at the gap. After the market closed yesterday, it ran, then it gapped open on the futures market open. Now, Cody, give me Gilead, G-I-L-D, on a daily chart. We'll come back to the S&P in a minute. A big part of this, Mark, was not necessarily just the reopening plan, but is also news and rumors out of Gilead Sciences that this, and am I saying it right, remdesivir?
You might be, you know.
Something like that.
That's correct. Remdesivir.
One of their clinical trials had some positive notes and whatnot from some media outlets.
Oh, and you should have seen CNBC when the news broke. It was this, like, how awesome is this? You know, like, and the futures were exploding, and CNBC talking heads were just like in jubilee, and it was like, and it's like, yeah, let's do a reality check on that. That was a nonsensical piece, probably completely designed to artificially drive up the price of Gilead.
Yeah.
And at a minimum, it was just this hope piece. Like, hey, see something. If you go into that actual, Gilead itself threw cold water on this, saying like, listen, hold on a second. This is a very limited. It is not. Let me find the exact words from their statement. Let me read you the statement from Gilead itself. I'm not going to be able to find this.
Well, and while you look that up, let me give some basic details. We've already known about this drug for months, okay? And there's been hope that this drug can do some treatment. They've been doing trials in Brazil, in China, in the US, in Europe, all across the world with some of this, clinical trials inside hospitals. One basic thing that I am seeing, Frank, is people so badly want to get back to the life they had, they're willing to run with any hope story that clicks.
Here's the statement from Gilead. Anecdotal reports, while encouraging, do not provide the statistical power necessary to determine the safety and efficiency profile of remdesivir as a treatment for COVID-19. I feel like I'm lately in the stock market a play-by-play announcer in a sports game that I have to learn how to pronounce all of these words that don't come naturally. It's like I gotta get it. Tommy Tuilakaga, just ran, but that's how control and how nonsensical and how naive this bullish euphoria is. It's like anything is bought up. The report is refuted, and the Financial Times had a scathing take on it that, hey, you had 100 people, none of them were on ventilators, and two of them died.
On ventilators, and two of them still
died. And it's like, did the drug itself cause the deaths? Like, it was a scathing rebuke of the report. But guess what? Is Gilead back at price levels from yesterday? No, because the hope is bought up. People so want for things to be better that I get it on a human level. But you got to be a cold, calculated market assassin.
I've read studies on this drug as well, and I hope it is a great drug. We just don't know yet. That's why they have trials, guys. But I've read studies on this drug as well, Mark, in other parts of the world, that basically the patients can't beat the statistical advantage over the placebo when asked if they're feeling better or whatnot, if it was the drug and those kind of things. There's no data that says this drug is actually doing great things and we've got some magic cure to the problem. That's not accurate. And the misinformation these days is infuriating me personally, because it is, and I understand the narratives. I do get it. We need science on this stuff. We need more trials. We need more drugs, and we need more of this data before we start pitching out this idea that we have some kind of remedy. We don't. We just simply don't. Well, now that's the negative comment of the day, I guess, here, Frank. I'm pouring water on people.
There's your soapbox. Well played.
But once again, from an investing point of view, you got to take in all of the facts. You can't not be there and be like, blindly bet. It's a bad bet to blindly bet. There's so many things you can do with your money outside of being in cash. If you want, and then you want to choose that. And if you want to blindly bet, I just don't understand why a bull wouldn't say, all right, I'm going to take the naked put route. I'm going to make this bet. I got to do something. And so I'm going to use naked puts to, if the market goes down, at least I get in at a lower price level. That just seems to be for me, the more sensible approach if you fall into the bullish camp. That yes, there's all of these bearish risks, but I'm in the bull camp. So, but I know that there can be short-term selling at a minimum. At a maximum, be that market assassin and be patient. Once again, this is a very long production that's going to have a lot of different acts. And I really do believe that those that are patient are going to navigate this market from the bullish side, more optimally than people that just put in their money into this low participation, low volume quant rally. That just seems silly to me.
Yeah. Funny comment in the chat here, Stephen. I like it. Stephen Johnson says the market acts as if George W. Bush was on the aircraft carrier last night pronouncing victory, but that didn't happen.
You should have seen the CNBC talking heads. It literally, there was this like total euphoria, and it's just like, oh my gosh, like just you stop acting like children. Like
Stop watching CNBC.
No, listen, I gotta have. You gotta know what the sentiment is, right? Though, right?
You gotta have it.
No, that's exactly right. I
Listen,
don't watch it for like the market analysis. I watch to see what they're telling people the market analysis is. It's like, oh God, people.
I can always tell you what they're telling people, Cody. I used to yell at Mark all the time, and I will do it again probably. So.
CNBC always just pours gas on whatever fire is happening right then. Right now, we've got a bunch of, people dancing around the fire naked about buying, buy. And so they're ramping up because that's what they always do, Frank. They have a narrative where they want to push, obviously out there to their investors. And frankly, if 65% of people in the country, Mark, think the markets are going to go up in 12 months, they're going to respond much better to commentary and analysis that tells them and validates their opinions, right?
Yeah,
so, those viewers.
And those 65% of people don't have anything on the quantitative trading. Like, I really think the short-term risk to the bulls is a technical flip, is a quant flip, because because quants don't care what Timmy says.
Nope.
Timmy can list about unemployment and economic damage and virus and deaths and second waves and consumer sentiment being down and consumer spending not returning and businesses. They don't care about any of that. They're momentum chasers. They are momentum chasers. So if they see a little momentum build in one direction or another, they start to slowly build in. And then that momentum feeds. It's why trading can be so amazing. It's why you can see Tesla run up this insane percent. It's why you can see Boeing go from 87 to 150 in a matters of days. Momentum is a real thing in the world of trading. And quantitative programs, they build, they add, they build. When they flip and they start to see even momentum go slightly in the other direction, they start to build that way. Look at the market over the last 6, 7, 8 weeks. The quantitative programs have driven and exacerbated the mood of the market.
Mm-hmm.
So if that mood starts to shift, if that momentum starts to die, if that momentum starts to slightly flip, well, that's what I would be primarily concerned with if I was a bull that had to get in today.
We're back on the S&P 500 here. Obviously, a little bear retracement on the intraday. It's going to be an interesting close to the week for the market, no question about it. Been an interesting couple of months in the market, but wow. I mean, fascinating, chart action, price behavior, all those kind of things. One argument that I cannot get past, Mark, and I don't know how to even quantify this. I read an argument this morning that basically there's a lot of institutions that still have a lot of cash, and they're going to be forced to pile into this rally because they have to chase the price. Do you think there is a lot of, because I mean, if you go back to the volume, the simple thing about the volume being light, that means a lot of people didn't participate, right?
Is that like a melt up theory?
Yep, that was.
Is that they're going to have to just start flooding the market with all this free cash they have?
Because what else are they going to do with it, And if they miss out on all the price appreciation, they capitulated at the bottom. Do you think Wall Street institutions are flush with cash? Are they waiting to buy? I mean, I'm not reading that, but I don't know how to look that up. I didn't have any data to refute the theory, so.
According to Goldman Sachs report that hedge funds saw the largest monthly dollar net selling in this month, as this rally has occurred since August of 2016, with all 11 U.S. sectors being sold month to date. Now, hedge funds aren't the ones driving this rally.
Mm-hmm.
Think about that. For the last 3.5 years, the month so far during this rally saw the largest monthly dollar net selling. So what's smart money doing right now? As you are sitting at home, oh, I got to get this. What is smart money doing?
Yeah.
Like, you know, there's an old football term is like follow the lines. What's smart money doing early? And it, you know, is smart money always right? No, but it gives you an indication if you don't know anything, what maybe you should be doing.
There's also an indicator I've used in my life. I'll call it the friend indicator. Whenever I get friends in my life start calling me, Frank, is it time to buy? And I'm getting those calls right now. You know, it usually means
it's not time to buy.
Yeah.
Yeah, I think that's probably fair.
I mean, and the public is pouring in right now. They're feeling like stocks are going to go up, 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 up. And a lot of this is based on the hope. Let's talk about this reopening plan. Actually, President Trump came out and said, you know, the states are going to have a phase by phase operation they're going to go through based on their own discretion. You know, he set out some federal guidelines of what he thought it should be. Both of the doctors were there. I think Birx and Fauci were talking about it as well. And there was a three-phase plan to reopen the economy. They went through a very long process to kind of detail that. Very interesting. Phase one, which can happen immediately in some states, basically is like a light opening, Cody. That would be the best way I can describe it.
That's the way I took it. Is it's a light opening. It's the bring overall psychological moods back up. Let people go up back outdoors somewhat. Let them go to parks and let them still socially distance. So before we had the full shutdown and we were just pushing socially distancing, I think this is moving back to that. If you have to go out, stay socially distanced, wear a mask, but you can go out to some places. They still have things like bars closed down, you know, where people are in little tighter quarters. But I think this is a psychological help, not necessarily a full opening at all.
Well, you know, I was very curious as to what Governor Cuomo was going to say about this, obviously, because there's this perception that him and Trump are pitted against each other, which isn't accurate, by the way.
No, it's not. They're getting along very well. Them and who is it? Gavin Newsom, governor out of California, which, like, yeah, you would think they're just arguing back and forth. They're getting along.
Cuomo had nothing but good things to say about Trump on Howard Stern's radio show the other day. I listened to an interview. It was a fascinating interview. And Cuomo was saying, hey, listen, president picks up the phone. We're on the phone. We talk through it. We're not friends or anything, but, you know, we're governing. This is what we have to do. This is what government's for.
That's the way it should be.
And this is a quote from Cuomo today, which I thought was really interesting, Mark. Situation we have now is unsustainable. People can't stay in their homes for this length of time. They can't stay out of work. You can't keep the economy closed forever. You just can't. Society can't handle it personally or economically. So we're moving into another phase, which is the reopening phase. Even in the hardest hit city, in the hardest hit area with the biggest concern about all of these things, they're identifying the psychological nature where people are right now. And they're basically saying, I can't do this forever. Phase one is a soft reopening. Now, theaters, I guess, are going to be opened, and churches, but with strict social distancing guidelines. Is that right, Cody? Like you still have to stay a certain amount of feet away and all that kind of stuff in phase one, but the bars stay closed and all that kind of stuff. Schools stay closed. Mark, what's your reaction to phase one here?
Listen, you know, I mean, this is the big question. And while it does have market implications, it's a societal question and it's a hotly debated question, right? With people that are passionate on the we need to open, and you know, other individuals who are equally passionate of that, no, we need to be cautious. So like, you have an opinion out there. I guarantee everybody watching this, everyone that will watch it on replay, all four of us, we all have opinions on that matter. The plain and simple fact is, like, from a market standpoint, I know we're going to reopen. America's not going to not reopen. And it's going to do it. And in different areas are going to be more full force than others. So like, when you analyze it from a market perspective, it's like, it's going to happen. Some areas faster than others, because you just have to at some level. And even if you don't have to, you will. What does the risk of that? What is the reward of that for the market? Obviously, from a market standpoint, more commerce is better, more activity is better. Does it mean everything is going to be back to normal? Well, that's naive, and that's not going to happen in the short term. Social behavior is going to change from some standpoint. But if it is a reckless reopening, if it is a non-adhered to reopening, i.e., groups of 10, but people just start going back to church, people just start going back to school, you see restaurants full, you see malls full, you see farmers markets, but yes, social distancing isn't as adhered to. There is a real risk of down the road of a second wave. And that second wave, which is it going to be worse than the first wave? Well, the Spanish flu 100 years ago, it was 5 times as worse. And so once again, as the cautious bull, it is one of the primary things, and there's lots of primaries here, right? Primary, I'm using that word too liberally, but like, we're going to reopen. We're probably going to have dealing with the coronavirus for a long time. Is there a risk of a second wave? Absolutely. Americans don't believe that this is serious in large droves. How are those individuals going to adhere to social distancing guidelines if they don't believe it's a problem to begin with? So a second wave risk is, like, for a long-term investor, yeah, that is a huge factor that I take into my calculations. But it's going to happen. We're going to reopen.
You know, but here's the reality. I think Governor Cuomo, President Trump, and I guess Drew was telling me the gloves came off today in their press conference, and Cuomo took some shots. I'll have to go watch that, Drew. Yeah, they're not buddies. Don't get me wrong. That's not what I was saying a minute ago. They're definitely not buddies, but I think they're both onto something here, and we're feeling it in the sentiment. People will not stay shut in their house forever, Frank. Eventually, they're just going to say, "Screw it, I'm going out."
No, it's the idea. The best metaphor I heard of this is if you have to go on a diet. Which diet do you want to go on? The one where they say, okay, you're going to go for the next 3 months where you're going to decrease your carbs, you're not going to have fried food, and you're not going to drink any soda, right? And you say, okay, for 3 months, I can do this. Or if I say, okay, you're not going to have any carbs, you're not going to have any sugar, you're not going to have any fried food, and I'll let you know when you can eat it again. Which one are you going to be more comfortable with? Because right now, this started as just a shutdown where it was like, we're shut down until further notice. That's that diet of you can't have anything that you want, and we will let you know when you can eat what you want. That's where the emotional side of people starting to get like, hey, we need something. We need to hear some type of end date to this. Now, phase 2 probably isn't going to happen until we actually have better data. And that's the actual opening of the economy. Phase 3 is when they allow vulnerable people to go back to work and them to re-enter the economy.
So this soft opening, Cody, how long do they think it's going to last? Phase 1, 2 weeks?
They didn't say any guidelines.
They didn't give any timelines. See, that's the problem. They said until you can show data that your curve is flattening, you don't have further outbreaks. And
that's what I'm saying. Phase 1 is just the mental aspect. This is just giving people a little bit of grace and like, hey, that cabin fever can be let up a little bit.
Yeah. Well, phase 2 is that more open, travel resumes, schools open back up. Mark, you sending your kids back to school in the fall?
Oh, in the fall? Well, it depends, right? Like all of this, I mean, we debate so many things. All this comes down to the virus, right? Where are we medically? Where are we on outbreaks? Like the virus is a real thing. Like how we should handle it as a society, we can debate that. We can debate that, and we can have a real rational debate. But if you discount the seriousness of the virus itself, you are literally being the proverbial ostrich, burying your head in the sand, not wanting to acknowledge everything we have seen, country after country after country, where this virus is spread. Your average flu doesn't kill 30 cops. It doesn't kill 50 school teachers. It doesn't kill 100, in New York City. It doesn't kill 100 doctors in Italy. This thing is a serious medical emergency for society. And so where are we, in July? Where are we in August? Have we as a society been responsible? Where's testing? Where's antibodies? I mean, there's so many factors. So ask me on July 31st. I hope, right? Because I'm a crap homeschool teacher.
Frank, Mark was teaching his kids poker theory the other day, which I actually have no problem with. Game theory, poker theory. I mean, that's probably good for a young man, right? And a young lady.
For sure. I'm all right with it.
I'm all right with it as well. Frank, the economy is going to reopen, and what those effects will be, I don't think anybody knows yet. I know from an overall perception standpoint, I think households think it's a good thing, but I don't know if investors actually think it's a good thing without the data or the proof. And that's kind of where the market is stuck in the mud here today. Let's move on here, guys, and let's talk about crude oil next. Bring up CL first, Cody, and then USO. I do want to look at both of them. You had a gap out here today, Mark, which was not a gap out essentially because you
That's just a new contract.
rolling into the new futures contract is what it is. So you're going to look at the price at 25. Don't let that fool you guys. Go to USO though here, Cody, and let's talk about oil. Now that these short-term contracts are rolling off here, Mark, we're going to be focused on moving forward. Does that do anything to change the way you're looking at the oil market? We're down here at support. It's trying to hold support. What's your approach here?
Same approach as always. I mean, the supply issue will get solved one way or another. I mean, you have Saudi Arabia and Russia coming out saying they're willing to do even more cuts. You have US voluntarily to cut a certain amount of barrels per day. Like, they're not enough right now to equate the supply and demand issue. Eventually it will even out. Now, do I think we're going to see oil at $70 anytime soon? No. But I'm sticking with my conservative naked puts at lower plan, do a little nibble, have a plan to build a larger position. You keep seeing the parties involved waking up to the reality of what they have to do. And they just have to do it eventually. And that will stabilize and create a bottom eventually in oil prices. But there's certainly downward pressure still in the short term.
Give me ExxonMobil here for a second. Let's talk. Question in the chat here. Frank, one of our regulars, Steven Johnson, basically, he says, I don't get why stuff like ExxonMobil and Valero are going up so much today. Any ideas? I didn't see any news specific on ExxonMobil. Frank, that is a very strong green candle on a day where oil is down, right?
It's pretty decent. You know, it is pretty decent. And the technicals it's holding on the technicals, right? And so why? I could give my theories, but quite honestly, Steven's or yours or anybody's are just as good as mine. That bounce off of support, we've reclaimed that 20. This is, you always hear me say I don't like, deeper retracements. This is one of the big reasons why I don't like those, because they've got really legit things for the other side, really legit technical reasons. Definitely some nice movement here. I mean, we are developing potentially a little pinch between that rising 20 and what is still, of course, our falling 50-day SMA. So, I'm still hesitant of oil as a whole personally, but you got to respect that price movement. Although this is what I always say, these kind of charts do us a favor, because now we know where support is, right? We know that yesterday that low was support. Not my opinion, people bought off of that low. So if I'm looking at it from a sell point of view, whether it's potentially a bear or potentially a bull who's looking to get in or currently in, that low from yesterday becomes very, very important in my opinion.
Mark, Exxon probably just seen as a safer area in energy. I'm guessing even with low prices, they're probably going to come out of it. And they have not done anything to the dividend yet. I didn't see any specific news, but do you think Exxon is a target here, guys?
I mean, it would be my favorite. If I were going to buy something in energy as an investor today, personally, this would be my choice.
I'm starting to warm up. There's just a lot of ways. I mean, Trump can raise tariffs. Trump can pay and Congress can pay for oil companies to not. There's a lot of increasing ways it can work out for oil companies, especially your big ones. Your small shell plays, there's still a lot of risk. And so I'm starting to warm up, not the buy today, but to the sell the naked put. It's something that we can talk about. Like, I'm having my live show, the at the market close for the week here in an hour and 15 minutes for pro members. It's up on the calendar in the normal room I do it in. And, something that I'm going to talk about because I want to think through. So if you're looking for those last minute trading decisions, those last minute investing decisions, as far as, what am I going to do in my account before the weekends? It was a real fun show last week. Just a real fast pace. We talk about actionable items. What are we doing? What should we do? What could we do? And ExxonMobil will be something I discuss more in length in that show.
So to make sure everybody got that, in an hour and 15 minutes on our website, Mark's going to be launching a webinar for our pro members, end of the week wrap up just before the markets close, kind of take a look and answer any questions that we can. We'll make sure you guys have the link, but it's on the events page on tackletrading.com. If you're a pro member, make sure you do not miss that. Let's get that out on Twitter as well, Frank. You
Sure,
did
yeah, we'll do.
on Twitter. Yeah, gold next here, guys. Gold is finally having a pullback for the first time in about a couple of weeks, actually. You know, we ran. Now 4 red candles in a row. Any pullbacks on gold, I think, should be seen as opportunities personally.
Right to support.
Yep. Frank, what you read on the chart there?
I like the price. I don't like the candle. We need some sort of, I mean, the bears are in the short term very in control. I do agree with you and pretty much, you know, everybody else here at Tackle Trading, it seems that, you know, any reason to buy gold makes a lot of sense. But I do like the price. Don't like how we got to that price. Gonna need some sort of development. If, you know, we could even pull back a little bit further and it wouldn't break my heart. I know it wouldn't break Mark's, but this would be an interesting price point, testing that old breakout. Certainly a place where it would make sense to see some buyers stepping back in. But I think you probably need some sort of signal based off of how it's looking right now. At least I would.
Now, Mark, that's just a little bull flag pullback up here, a bullish retracement. How deep would you want gold to come back? Are you the kind of person that says, give it to me at 1,500 an ounce? I mean, would you want to see a deeper sell-off, or is this enough to get interested?
Go to GLD. I think last week I sold a 140 naked put on the Friday show. I have since sold a 144 naked put, expiring, I don't know if it's May 1st, somewhere in early May. I probably on that show will be talked into selling another naked put because like as a patient bull in equities, right? You want to put your money to work, right? And it's like, all right, so where do I feel most confident in? From a cash flow, if I'm going to be put shares of something, let's see, what did we just buy? Did someone just sell?
He did a 144 naked put. Cody's taking your trade with you.
Cody's like, I'm doing it.
I'll take the trade with you.
And so like in the places, me personally, once again, y'all can do whatever you want, you know. But for me personally, as I'm waiting for equities to become sane again, and find better buying opportunities in equity, there's very few things in the market as far as a trade cash flow willing to take ownership than I am of gold at lower levels. I am not a buy at breakouts. I am not a buy at high. I have to get put a better price. I am stubborn that way. That's why these little pullouts don't freak me out, because I didn't buy on Tuesday. So gold at lower levels is something that, well, the fundamentals are insane, right?
Yeah. Fundamentals of gold are definitely there. We've been talking about it quite a bit. I love the pullback here, obviously. GLD, GC, you name it.
And you get a better price. On these pullbacks, this is why I get more bullish the lower gold gets, because you get better credits for those naked puts.
Yeah.
You get a better potential entry price. Just disclaimer, never sell a naked put if you don't have a long-term investing plan. We do not advocate at Tackle Trading. We do not teach selling naked puts as trades. It is only in conjunction with things that you are willing to own, and not just willing to own with a very long-term horizon. And me specifically, how I teach it on the weekend classes is that you're willing to even buy more if it goes lower.
Mark, that is awesome. Awesome that you bring that up, because you're absolutely right. The biggest mistakes I see and have ran into with naked puts is we say we're willing to buy it if it gets down there, but we don't mean it. And we don't do a very good job if that's the way we're trading those naked puts. So I 100% agree. If you're selling naked puts, you should be excited if you get it too. That's why I know when Mark's selling it, I know he's excited. He complains when he doesn't get it put to him. And that's a much healthier way to trade naked puts, in my opinion, as well.
I mean, here's the thing, and this is like investing mindset 101. Like right now out there, ask yourself, and you could use it with a stock, you could do it with oil, you could do it with gold, you could do it with silver. Pick your intellectual exercise that you want and say, well, if Delta was at $5 today, would I buy? If Apple was at $2.20 today, would I buy? If Netflix came back and was at $3.70, would I buy? Oh, I missed that breakout. If gold was at $140, would I buy? And like The answer is almost always yes. Of course I would. I missed the breakout on Netflix, and now it's at 350. Oh my gosh, what a deal! The problem is when price actually starts going to that, that's when your faith is tested.
Yep.
Did you really want to own it, or were you just basically tricking yourself?
It's easy to say.
So if gold comes down to GLD comes down to 140, 142, 143, did you really want to own it? Because if price goes down, you should get excited at the potential.
Mm-hmm.
And if you're not getting excited when it's coming down, then you don't really believe, and you're just trying to look for free money, and you need to find a different way of approaching trading and investing.
Correct. I agree 100% on all those fronts. Let's keep working through the markets here. Move on to the dollar if you can here, Cody. Stuck at 100. I got nothing to add on this one, guys. I mean,
listen, I'm trying to quit smoking, and you want to talk about the dollar?
You love the dollar. You go back and forth on this all the time. 3 weeks ago was your favorite
I
thing to talk
I
about.
dated the dollar for when the momentum shifts were fun there for a couple of weeks. I dated the dollar, but that long-term relationship just isn't going to work out.
Is now getting stuck here.
So.
Frank, that's a compression pattern triangle. I mean, these ones are tricky to trade, in my opinion, because it's hard to know which way it's going to break. And then I don't usually trust these signals either. How do you trade these symmetrical triangles?
I look at the break of the triangle as the signal and the retracement back to it as where you'd look to set the trade up. So I'd want it to break one way or the other. Then I say, okay, looks like that side won. I'm not a big fan, as a general rule, of using that as an entry. But then when it pulls back, use that as an opportunity. It comes back to that old trend line, uses it as a potential support or resistance zone. So that's how I look at those things. We can kind of treat them like K trades. They're just a different style of a K trade, right? Yeah. That's pretty similar to my K trading rules as well. Not exactly. So that's kind of how let's come out. Let's see who gets win. Let's shake out the other side, right? Let's pull back. Let's put that to test. And then let's look at that next swing.
Yeah. And by the way, out there, if you're watching our show, we're going to be doing our Q&A as we usually do on Fridays. So if you have any questions for the coaches here today, just pop those in the chat. We're happy to answer whatever we can, the best we can, if we know it. And if we don't, we'll let you know as well and whatnot. Let's move on to some company news here while we're getting those questions come in the chat. Boeing first. Guys, they did announce they are going to reopen their Puget Sound factory, and the stock is trying to break here. Kind of a symmetrical triangle here on Boeing as well, Frank, after a long downtrend. Now, what's interesting about this, very different than the dollar, is you got so much clear air, earnings coming out here in a bit. I mean, somebody could talk me into a volatility play one way or the other here, Frank. I don't know. What do you see?
Yeah, I could understand the vol play. That's about where I would end. I personally have no interest in, trading Boeing as a bull at all, really. So not just today, but overall. And a vol play going into earnings, and there's going to be lots of things. I mean, we're getting right into it, right? We got close to 100 S&P companies next week, and then the huge week thereafter. I could get behind an earnings play if the numbers were right.
Frank is so nice. For those that are just joining us, we have new people join us all the time. Frank is such a nice human being. That was a normal person's equivalent of saying, if you buy Boeing as a bull here, you're an idiot. So that was Frank's nice, polite way of saying that.
Maybe. If I bought it here, I would feel questionable. So that I can only speak for myself, nobody else.
You would not take this signal? Is that what you're saying?
I wouldn't. Yeah, I would not take the signal. I certainly wouldn't take this signal on a Boeing. No. Boeing's got a ton of work to do before I will ever be comfortable buying them again.
Yeah, they have tons of work before you can get excited, although the headline is they're up 13%. And when you look at it as a trader, it's such a small candle because the volatility is just so extreme in the markets that we're in these days, guys. I mean, it's pretty incredible. That's a 13% candle when you think about it. mRNA here, Cody, another one. Actually, they're working on, I believe, some vaccine research for the coronavirus. They actually just got approved for $483 million in funding. Maybe the gap out on Gilead, Mark, is not necessarily about the medical response to it. It's the fact that
yes, it is. Yes, it is.
Well, no, I mean, people are going to buy that drug, right? Maybe there's just raw demand for the product. I mean, whether mRNA gets their
I
vaccine.
saw Gilead after hours what it was doing on the rumor. Like, they're like, like pharmaceuticals, healthcare, we've seen some really encouraging things in earnings reports and the early stage. Abbott Labs, Johnson and Johnson. You know, if you're looking, like, if you're the type of individual that's like, I really want to do something. I mean, those naked puts on pharma companies, on Abbott, on like, there's a lot of plays, Johnson and Johnson, like, man, those just feel like a lot better. Like, no matter what happens, plays, they seem pretty decent compared to your average decision.
Mm-hmm. You can't chase this price action no matter what, though, Frank, in my personal opinion. Now, that being said, I said that about Tesla while it was running from 300 to 900. These really like blast out rocket ship kind of moves. I mean, outside of day trading, do you even touch them at all?
No, this is where you really need to know yourself and know what you want and be ready to wait for it. So, I mean, I'm very consistent. And this is basically what I want in a scenario like this. I say it all the time whenever someone asks me this question. Either consolidate, create me a high base, and then let me break out of that base. You know, that would be several days potentially down the road, right?
Mhm.
But that would be in play. Pull back gently into what would be the rising 9 EMA, which obviously is a ways away right now, but we'll be catching up as time goes on, and look for a pullback opportunity. So if it goes up on Monday, I don't feel like I miss anything because it didn't do what I wanted it to do, right? So I would have said probably the same thing yesterday, if I'm being honest. And so it's really where it's important to think ahead. You know, so much of our swing trading, especially, we can plan these things ahead of time. This is what I'd like to see. Will I get it? I have no idea, but does it hurt to ask? No, I'm ready to take action if I get what I want.
Mhm.
So for me, ideally, it's that consolidation. Go into a little consolidation period, give me a high base, and then break out of that. A week from now, that happens, I probably am very, very interested.
I mean,
Yeah.
isn't that such a beautiful technical pattern?
Yeah.
Like,
Oh,
I
for
mean,
sure.
Blast out too. I mean, just high base, and the breakout there 3 days ago was very, very clean. But now heading on a Friday after a huge gap out, what are we up 15%?
well, if you're not taking profits on a
You got to take
breakout like
profit up there.
that, like, I
Come on.
don't like.
If
Yeah,
you're a
Just,
trader,
listen.
like,
I'm all about letting your breakouts run, but even I would say, you know, let's go ahead and take a little bit off the top here.
Apple Computer next. And by the way, if you've got questions, pop them in the chat. We'll answer them as we go here. Apple downgraded to a sell at Goldman Sachs. I was surprised by this, Mark.
because they've been listening to me on the halftime report for the last 4 weeks, and they finally said, you know, that's some reasonable analysis that you're giving Apple.
Goldman this week, it's funny, Mark, because Goldman 2 weeks ago was uber bearish, and then they started to become moderately bullish and then more optimistic. And now literally day by day, the analysts at Goldman are backtracking and starting to say prices are overextended. I saw the downgrade on Apple. One of the
Listen, and my Apple argument, and if it's any company like that, wonderful company, right? When there's actual resolution to the virus, is Apple a great place to be as we get raw data that things are getting back to normal? Absolutely. I have loved Apple's response to from a social, corporate governing standpoint. I have nothing but good things to say about Apple. I hate companies that have higher price products going into a recession where unemployment is not going to V-shape. Companies are not going to hire back. They're not going to spend. Consumers spending on some level is going to be curtailed. And then to buy at elevated PE ratios on the hope of that just seems to me to be ridiculous. Like, you're buying at levels that, well, you better, I mean, it's just, it goes against everything I believe in from an investing standpoint. There's a lot of headwinds for higher price consumer items. Wonderful company, hate the price.
Mm-hmm. Frank, it's a tough chart read as well. I mean, even outside the fundamentals, you did just get above that 20-day moving average. So you're kind of holding a little, it's almost like a ledge up there. You know, how would you read this chart right here?
Yeah, I think the longer we can hold that little range that we've put in for this week, you know, the more you can be comfortable for a break to the upside as a short-term swing trade or even day trade type of a play. Break of the floor, I wouldn't personally call that a sell signal. Well, I call it a sell signal. I wouldn't call it a bearish signal. Let me put it that way. There's still a lot. So I mean, I'd want to see the retracement back again. It's right now the bulls have reclaimed the charge to, the charts through those pivots, right? And whatever I think, the chart's smarter than I am and is better looking than I am too. So I'd want to see how it responded off of that. So if we could, again, if we're here having this conversation next Friday and we're still in this range, obviously earnings are going to completely throw a cold glass of water on this. But if earnings weren't there, you could really sign me up for a break of that. So.
Yep. Because the bulls are in charge here in the short term with those pivots, but
So,
the fundamentals, I'm with Mark.
I would expect I would
company.
suspect, and technically I would suspect if we take out this little floor, there should be some downward movement in price. It's just not enough for me to want to actually literally sell. I would call it a bearish signal though.
Right. Procter and Gamble had strong results on their earnings. In fact, I had the data earlier. I'll have to pull them up. But they also reiterated their dividend, their holding. Mark, obviously a company that a lot of people are going to be interested in the face of a recession, maybe, or consumer spending changing and things like that. These safety plays, these consumer staple plays. I mean, how are you thinking about them right now? Are you interested in a PG?
As long as their revenue lines are diverse and not impacted, then these big consumer staple companies, like even Coca-Cola, Procter and Gamble, they draw their revenue from all kinds of different sources. As long as those streams seem healthy, then absolutely. But those streams have to seem healthy across the board, and that's where data comes in. That if you're looking for those places, but I would, I don't have anything bad to say about Procter and Gamble, but like the Abbott Labs and the Johnson and Johnson just really, let's look at ABT and J&J. Their earnings reports just were really impressive. That no matter what happens in this environment, and we've seen that result this week, right? We talked about Johnson and Johnson earlier this week. We saw, investing saw a lot what we talked about and saw healthy revenue streams. Potential for real, true, genuine growth. Go to ABT. We see these in these earnings reports. It's like, so if you're going to go and look what Abbott has done over the last couple of days, and so like there's chances if you wanted to trade momentum, but certainly from an investing standpoint, like if you see deeper pullbacks, if the market sells off, this is where you want to gravitate to, I believe, in the shorter term. These type of companies that really, really look good in their earnings reports, because not all earning reports coming up are going to be pretty.
Nope.
So the ones that are, pay extra close attention.
Might belong on a watch list. I think that's a pretty reasonable approach.
Yeah, I think so as well. There will be winners and losers in all this. I mean, we've talked about that quite a bit. But what's interesting about the price action here today, guys, I mean, I'm seeing some of the areas of the market that were most hard hit, the ones bouncing back here today. And we don't need to analyze each one of them until the end here, Cody, real quick. But we'll flash fire through a bunch of these, okay? EOG. Mark, you tell me if you see a theme. These are some of the top gainers in the market today. Okay. EOG, MPC. And Cody out there getting his Wi-Fi in Hawaii may not be able to cooperate here as quick as I want. That's okay. M as in Mary, Marathon Pete. Okay. C.
Or we could study the mortgage bond, fund.
Look at that. Pivot relationships coming up here. Valero. Obviously oil companies, right?
Yep. And
oil making a bounce.
Oh, sorry, Tim.
Energy companies making a bounce back here today, Frank, and they're interesting charts across the board. I'm seeing the same thing.
You are seeing across the board in energy. And so little by little, people are getting more and more excited. I mean, zip back just a little bit in time on Valero here, Cody, because any of them will work. I mean, it's been a heck of a long time since we've seen positive pivot relationships in energy stocks as a whole, right? They still got work to do. There's still a lot going on behind the scenes, but technically speaking, we're doing something we've not done in quite some time. And you do have to respect those. I think you have to pull off at least a little bit if you were remaining bearish within the energy, because you have to respect that we're seeing that across the board in so many of these companies. Again, is it enough to sell you as a buyer? That's probably a personal decision, right? But I do think that the way we've seen price action develop over the last week and a half, 2 weeks is certainly a case from a buy side.
Yeah. And if you ever need more evidence that the markets are algo driven, you've got this algo theme going out there right now, Mark. Either one set of companies moves on one day or the others, and the other does not. Here are the companies that are down big today. Tell me if there's a theme here, and there is one. Peloton, Slack, Netflix, Electronic Arts, Amazon, Activision.
All the hotties.
All the
Everything but top.
coronavirus stocks are down. All the other stocks are up. I mean, it's like the computers are running a lot of this, Mark, right?
No, it's your virus plays. Once again, I mean, it's zig when it's zag. When Tim and I talk pre-meeting in this market condition, I say, Tim, you got to zig when they're zagging right now, because the news flow is so constant. Like finding, like if you just chase things and are like, get caught up in the euphoria of price movement, you're probably not optimizing. Now, if you're trading, that's fine, right? Trading, day trading, short-term swing trading, sure, get caught up on that because you can make a lot of money doing that. But from that investing position standpoint, like finding those optimal entry points aren't after these huge full day runs, these full 2-day runs, because then the news cycle switches. And then there's bullish news, there's bearish news, and chasing the dragon is not ideal from an investing standpoint. I still really big fan of selling naked puts down in that range on Activision. I love Activision. It's all about a matter of timing and optimizing and finding the most ideal way to play it. Virus, what? Does anyone think the virus is going away? That Netflix won't have its day in the sun again? That Amazon won't have its day in the sun again? It's just there's a lot of great trading that can be done over the next 6-7 months.
Mm-hmm.
And I think we all need to be more aggressive the next time Netflix has a really nice breakout or a really quality pullback. Because you're going to see this cycle go back and back and forth. I think it's going to be an amazing trading environment the rest of the year. I really do.
Yeah. Oh, I love the trading right now. I mean, that's the thing about markets. They're so incredible because the volatility picking up gives you so many opportunities to do like naked puts and volatility trades and sell for credits. But even just the back and forth day trading has been great recently, Frank. I mean, there's all kinds of opportunities in markets, no question about it. So you got to love the action. I mean, if you're a trader, you have to love the action.
Yeah, it's been really good action as a trader as of late. And it's for me at least, it's kind of slowly working from just stick to the day trades to now stick to the 2-day trades. So or 3-day trades. So it seems like it's getting a little bit more, swingy in my opinion, although that's just my personal, preferences and style.
Here for the last like 6 weeks or so, as the whole volatility has been crazy, we haven't been prepping swing trades. In fact, we've just been going above and beyond in different ways on our weekend reports over tackle trading. But I'm starting to wonder, Frank. In fact, I asked the question earlier in the week to every coach: is swing trading back? I mean, do we have the opportunity to do some more swing trading now that the markets are starting to at least perform differently than they did during the crisis sell-off?
Right. It's not completely all or nothing.
Yeah.
And I think so. I think, in my opinion, we want to kind of get through this month, get through this big wave of earnings. I mean, even if you believe it's time to start prepping swing trades again, there's not going to be a ton when you look at earnings. I mean, we got 2 huge weeks ahead of us, right? 3 really. And so I think as we come out of this earnings season, yes, I do think that we can kind of come back to that as a real, something to lean on. I think for me, I want to get through those earnings, see how the market responds. Obviously, the individual companies as well. So that's kind of where my head is. But yeah, I do think, it's starting to behave more and more like a swing traders market. Yep. The big thing is it's got to get rid of all these overnight gaps, right? I mean, because I can prep my trades till I'm blue in the face. If I have to re-prep them on the open, what's the point, right?
Mm-hmm. So. Yeah, the gapping is really, really difficult for swing trading environments, but that's where position trading, day trading, I'm with you. I think a couple weeks out, I think the market will be ready for some swing trading though, if we get through earnings.
I'm hoping, and I think that personally, I think that's how it will play out. And I think I'm hoping we get opportunities on both sides on a pretty regular basis.
Yep.
I got a couple for you, Tim, if you're ready for them. And these are more technical and less news. And the technicals caught my attention, and I'm also seeing these type of charts in more than these companies. One that I'm seeing a lot of this pattern is also one of my favorite patterns is MIC. This is just a little investment manager. Earnings coming up in like 11 days, so not really anything other than maybe a little short-term thing here. But this pattern where we've created that higher low, we've had that the bearish retracement happened. We saw downward movement. We haven't broken out, right? If we go back in time a week and a half, this roughly speaking is what a lot of things in the market look like, right? So where we're starting to see that build up at the top. One cool thing about these patterns is there tends to be a decent risk to reward profile on them as well. Obviously, I think your signal is pretty clear it's got to break resistance, whatever your personal rules might be. But there are still plenty of things out that are looking a lot like this. And on the flip side, resistance might win, right? If I traded that bearish retracement, I'm not loving it, but the reason I got into the trade is still there, right? And so if we take out that trend line that you've got drawn there, could be where we see some downward movement as well. So this is a really cool pattern in my opinion, and you're definitely going to see it, not as much as you would have a week ago, but there are still plenty of things out there that look like these guys do. You're seeing, like the energy stocks that we looked at, you're seeing things that have started to show some pivot relationships, like LYB, very similar. They're a chemical company, but they're very similar to the way that those charts are looking over in energy, where you've created those higher highs and higher lows. We're now at, maybe we need a little bit more movement, I guess, again, rule to be determined, but we've established a potential support zone, have a clear level of resistance ahead of us. Again, risk to reward, if we're trading in this, that's always important, right? And whatever today is, it's always the most important thing, one of the most important things to remember. So, but we are going to see some decent risk to reward profiles on these type of charts. And it's less, about the names here. And I just wanted to kind of give some examples, although two things I thought were interesting, and I wanted to get your take, everybody's take on them. And NVST, Nathan, Valerie, Sam, Tom. This is a stock that I IPO'd not too terribly long ago. They are like dental medical supplies, like implants and those type of tools that go with that. What do you think of this type of a chart?
Well, I mean, even just a rough look at it, if you've got to stop at 16, target at 20, you're at 1750 now, $1.50 down, 250 up. You probably have a relationship, and maybe you can even target 2050 at that moving average. So yeah, I like I love reversals. I love pivot relationships. It's the way that I was trained on how to read charts. It's what my eyes always look for, as well as the higher high, higher low, higher high, higher low situation. Now, where you trigger and how you would play it, though, I love the pattern. I don't know if the reward to risk would be there by the time I get confirmed, because I might have to buy up there like 18 and change, right, Frank?
Right.
So I love the idea. I love the pattern. I'm seeing a lot like this right now. Obviously, this is what the market is doing. Mark, what about you? If you got clear air on some of these really, really depressed, beaten down stocks?
It depends on the industry. I mean, from a technical standpoint, as long as you have a moving average pocket like this and you have a breakout, that usually is in my wheelhouse of things I like from just a pure charting standpoint. So like you got room up to that falling 50, you get a breakout. I mean, that's how I would target. That's how I would play in relation with that. But those patterns have been very, very successful over the last 3 weeks. Very, very successful.
Yep.
And one more, and then I'll let you get back to work. And that is work. Our old friends at Slack, and a few of us have been chatting some Slack over on Twitter. My man Nick and Ilka and Ryan Franklin, who just took a job as a superintendent in another course. So if you're out there, Ryan, congrats, bro. That's awesome.
What's that nice sound you heard earlier when I was getting Slack messages?
Oh, nice. So this is an interesting one, right? We've got a very clear line in the sand at $30. Everybody with eyes can see that resistance zone, right? And we were looking at it last night, and I was kind of said, I like the idea of a breakout, but ideally we either consolidate or pull back, right? So I'm actually very satisfied that we've got a little bit of a pullback through here today. I'd like to get a little deeper pullback so we could at least entertain the notion of playing the pullback into 30 as our first target. What's folks' thoughts on this one here?
Love the pattern. Big picture.
I love
pattern.
the inverted head and shoulders pattern and 30 break. That's absolutely beautiful.
So I mean, that break is beautiful. What if, Cody, let's just pretend here, this is just a good habit to get into. What if we drift another little candle on Monday into maybe an inside candle on Tuesday, and risk to reward makes sense. Obviously that would be the case. Would you be open to the idea, Cody, of, maybe pulling, trading into or scaling into the pullback leading into the 30, or even if you were satisfied from a risk to reward standpoint, do you think 30 would have to break before you'd be interested?
Yes, I would be more than interested in scaling into it. If it stays above these moving averages and it does come down here, and what we start getting is off of this right shoulder, we see this trend line right here hold, then yeah, if we come back down to the trend line and hold at the trend line, yeah, I'll scale in some. And then as long as we keep going up, I'll keep scaling in. But if I'm going to enter the trade there off a small pullback, my stop's going to be very tight below this line, probably possibly below this resistance or support level, excuse me. But yeah, if we do get some kind of pullback, you know, to these moving averages to that resistance level, absolutely, I'd be willing to scale in before. And then what I'd probably do is, you know, buy a little bit here. When you get the break of 30, I'd probably add to my position.
Yeah, and that's kind of where my head's at too. If we get a decent little pullback and a good little signal and risk to reward, because it'll depend on the price. If we see upward movement on Monday, yeah, I assume 30's a line that is going to be really hard to beat. So risk to reward is going to have to make sense at 30 from my perspective. So this is when we can actually kind of think about, you know, in this type of pattern, whether maybe you don't like work. Hey, how would I play the pullback if that's what I get? How would I play the break itself if that's what I get? And hey, there's a third option. It may never break 30, right? The only thing I know for sure is the last 4 times it's tried, it's been pretty sad. So at least if you're a bull,
ceiling. Yeah,
it's
That's
a strong level.
feeling. And the other thing you got to look at is when you do these trades, you got to know where your stop is and you got to manage your risk. Because if I'm talking about a pullback, you know, to 25 or so, and then getting in, and my stop's below 22.50, that's a $2.50 risk. Make sure that even though you can clearly see the pattern, that $2.50 risk, you are pricing that into your own portfolio. Position size.
Awesome. I love that chart. Love the company. Love the fundamentals. Yeah, a consolidation, little retest on those MAs, Frank, would probably make, you know, a lot of traders' hearts, you know, a little bit more acceptable to get into something like this. But even a breakout, I know buying those big breakouts after big moves, it's always kind of have to just hold your breath and do it. But the strength of that resistance zone is one of the reasons why, if it does break and confirm, it would be such a significant break, in my opinion.
Oh, exactly. And at least now we're going to get a little bit of a breather before we theoretically break it, right? We're not going to break it today, realistically speaking. So maybe we just hover a little bit and take another run at it. So an interesting chart for sure.
Hang tight. No work over the weekend, and we'll work next week. Couple of questions I saw. By the way, if you have a question, pop them in the chat. Happy to answer one or two here as we wrap up the last 5-10 minutes of our show. I saw a couple of really good ones over in our clubhouse. I do want to throw this one at you, Mark. This is from Jared and Diane Taylor, who are long-term members of our community, pro members and whatnot. They say when there is a reverse split, like on OIH, Cody, give me OIH. What happens to the amount you can lose if it goes down? Long story short, basically, I had 200 shares. I was just going to sell covered calls on it to try to recoup some of the losses when it was down on the bottom mark, obviously. Now his 200 shares are not enough shares to do covered calls. Any thoughts?
Yeah, no, you know, and this is happening in oil quite a bit. It is a trend. It makes it like you can't do anything. Now, the total amount percentage you own hasn't changed. You know, so when they reverse split, you own fewer. I mean, you don't own any different percentage of the overall ETF.
Right. If you had $5,000 in it, you still have $5,000 in it.
Yeah, I mean, but the problem that becomes is that there's so many strategies we do at Tackle Trading that involve cash flow, right? That involve the selling of naked puts, the selling of calls. Now, one thing that is nice is that you can go to an options chain, and those option availability are still there. So if you go to an options chains, and for all of the weeklies, you now see 2 sets of options available. The downside, while the availability is there, the liquidity is now not as robust. And so generally on a reverse split like this, you can't necessarily lose any more money than what you originally had, because the movement of price is going to be relatively the same. It's just the manageability of the position is a lot more difficult. You have a lot fewer good options. And so usually it is on a reverse split, if I find an exit point, I jettison, I move on to something else. So,
like Cody, real quick, open up those May 5x100 options, because if you had 100 shares now, Frank, on a 20-to-1 reverse split, now you got 5, not the regular monthly ones, not the hundreds, but that second one. Yep. And the liquidity here, it's not the worst. You can still sell that 5 strike, 18 by 25. So I guess, but Mark, what happens is over time, it becomes worse and worse, doesn't it? I
Yeah,
mean, because
no, and that's the thing is it's the risk is still the same. The manageability just becomes a lot more difficult.
yeah,
Just becomes a lot more difficult.
Yeah,
well, you
if
know,
it's
and
going to be a headache, I would just move on and find something else personally.
I mean, if the thesis is based on oil, I know these are holders, these are companies in oil, but you could even legitimately just say, okay, maybe I cash out of this and go buy some O or USO, you know, and start playing that instead. So there are
No,
some things you,
and that's going to be annoying if they do a reverse split on a USO at some point.
yeah,
That's going to be annoying.
I know we all have our fingers crossed that they don't, and I think we
Now,
all kind of think they might.
I think they will, guys.
but there's not additional risk to USO. And the one nice thing about USO compared to a OIH is the total, and this is why I am not panicked and it's not influencing my decision at all on how I play USO, is that USO is insanely liquid.
Mm-hmm.
The liquidity of USO is off the charts. And so even if you get 2 option chains in which we have to make those decisions, the liquidity in those option chains should be pretty decent still, because USO is just a massive, I mean, it's one of the most liquid trading instruments in the entire world. And so liquidity, as far as being able to get in and out, tighter bid-ask spreads, is it going to be ideal? No, but I don't worry about it on any level to not taking action today, because just the liquidity issue is not going to be as pronounced as it was in OIH.
Mm-hmm.
Now, it will be annoying if it happens, but it's not influencing my day-to-day decisions on the naked puts I sell on USO.
Mm-hmm. Do they have management team that just makes that decision? Is it a board vote? I'm not even sure how it works.
I think they just like seeing big numbers. Like
they just want the numbers to go up.
It's like, hey, look, how do we get our ETF to go from 3 to 90? Oh, it makes our ETF look better. No,
it does that day, because usually you look at the top percentage gainers and it'll be in there. So because it hasn't processed the change yet.
By the way, if you're out there watching our show right now, it is Friday Fun Day. We always have a good time here with you, Frank, and Mark and Cody. I always appreciate you guys. On Fridays, we do Q&A if we've got good ones or anyone's coming in, and we try to answer your questions. If you're watching our channel for the first time, subscribe, click the bell, come back and join us. Any day the markets are open, we're live at 12:30 Eastern. And we also do a lot of good stuff on our YouTube channel. Go check out our
some real
archive.
cool stuff. Yeah. And if you missed Gino's butterfly spread on Wednesday, definitely worth going and checking that bad boy out.
Wasn't that awesome, Frank?
He did a great job. I watched it late that night. I was meeting with some new team members, so I wasn't able to join it live, but it was awesome. Yeah.
Yeah, I thought it was awesome as well. And even the week before, Tyler did a great job. The week before, Noah did a great job. We've added that.
It's really good stuff. Yeah, absolutely.
Big hit. And by the way, if you are watching our channel, I've got 235 people here and 54 thumbs up. Come on, give me some better numbers than that. I've got to get a better percentage conversion to likes here, Cody.
It really makes Tim's day. He is that percentage is a big part of his day.
Yeah. 2 more questions. I like these 2. Okay. Steven Johnson, what do you think about Baba lagging so much against Amazon? I thought their recoup would be faster than Amazon. Amazon breaking in, quick peek at Amazon, then we'll leave it on Baba while we answer it here. Obviously, everybody knows about Amazon breaking out and running like crazy and all that kind of stuff. We've talked about it. We talked about the breakout. We've talked about the momentum, the strength here. But then Baba, very commonly referred to as the Chinese Amazon. And I know they're not the same business model, Frank, but we always think of them like that.
Right.
If China's economy is back up and running, why isn't Baba also looking like this chart? Give me Baba again here, Cody.
I mean, I think the simple answer is very few things look like Amazon. So, I mean, part of it at least is Amazon has just gone ham, right? And it's not like Baba's really dragging really. It's just comparatively speaking, but most things are. So I think probably my answer would be the biggest thing is it's like me losing to, what's his name, Usain Bolt, the really, really fast guy. If I come in second to him, I'm pretty happy with my speed. I wouldn't, but I would beat Mark.
Yeah. You think you could beat Mark in a foot race?
I would hope so.
No, actually, no. And
The
listen,
determination of Mark to win. I don't know, Frank.
no, a couple years ago, I'm the oldest of the Justice
Didn't
brothers.
he have an entire thing where he was running like every day? Mark was.
No, a couple years ago, all of the Justice brothers and a couple of the nephews lined up for a foot race, a sprint, and guess who won? So I would be very careful. Very careful.
How far are we talking?
Yeah,
We're
how far are we
20
talking? Yeah.
yards or 100 yards?
A 40-yard dash, I don't know. A mile, I have no doubt.
The further
that's not a sprint.
Well, I didn't say a sprint. I said a race.
Well, the 100-meter dash is the Olympic sprint.
At the quarter mile point, I'm going to have to have a couple cigarettes and some Jack Daniels,
He might win because I'd have to come back for him and, and
tortoise in the hair.
give you a sucker punch and then cross the line.
Never underestimate someone who loves to win's ability to cheat.
It's true.
He'll trip you, Frank.
On the second lap, Frank.
Listen,
you'll be
Tim,
wheezing.
Tim and I have lived with you and known you and Matt for a long time. We know that never underestimate what a cheater will do to win. Tim and I have learned that lesson.
Absolutely. Do not play board games with these guys unless you're ready to have a long night and an interesting path to victory. There's no question. Last one here, and from a new member, Pascal. Hopefully I'm saying that right. And let me take a look here.
Welcome, Pascal. Good to have you.
Please, what's the next advice to someone who has no knowledge about Forex trading and wants to start doing it? Now, Cody, I'll give this one to you.
Oh, yeah, that's a good answer.
I would definitely start with the Forex 101 course over there at Tackle Trading. And if you're interested, make sure you're following my reports every single weekend.
Yeah,
I'll go through and I'll give you my 2 cents on the market. I usually do a little teaching segment that's not necessarily Forex related, just a nice segment to go with it. And then if I see trades up there that I can easily identify, stop, target, and entry, then I'll break all those down. So if you're interested in that, you really need to understand how the pairs work, how the position sizing works. And then after that point, follow me on those reports and I'll help you out with Forex trading.
Bring up the website real quick, Cody. I want to walk people through a few things because we have 2 events tonight, and I want to explain to Pascal how he gets to that content if you can. Just tackletrading.com for a minute. I mean, we have a real simple, community here, guys. And if you're out there and you're new and you're watching, basically we do this show on YouTube just to connect with everybody, try to bring our analysis, our insight, and have a good time doing it. It's as much for us as it is for you.
For sure.
And through that, Frank, hopefully we can promote our company as well as our community and bring it in and grow it. And we've been doing that. We have a standard offer. It's not that complex. 15-day trial, so you can try out what we do, see how it is, see if it's for you or not, and set up a subscription. Now, our pro content, Cody's course is in the pro content. So that monthly pro, you can sign up. And there's a link, by the way, in the chat as well as in the description of this show. But if you go up and highlight
just below the video.
Yep. Highlight courses there, Cody. And if you'll notice there, anything that says free or pro, Pascal, if you want to sign up for the 15-day trial, you could go through Cody's course, if I get that out, just over the weekend. I mean, it's only a couple hours, it's great content. You can get through it. You could do that during your trial. You could go watch the Forex report that's coming out tomorrow, this weekend while in your trial and assess whether or not this is for you or not in terms of what our product is. The premium or the pro membership's $97 a month when you start paying for it. And that comes with a lot of other stuff outside of the courses. Click on the events page real quick here, Cody, because there's 2 events. And Emily, I do not want to miss promoting your event tonight.
No way.
So here are some examples of things we do in our pro product. Now find the 17th, if we're on the right date there. You'll notice Mind of a Trader in Mark, it's only 30 minutes from now. We're going to be doing it. You have, and this is for pro members, I believe, the Mind of a Trader. Correct, Mark?
No, what was that again?
Pro members only for Mind of a Trader.
Yes, pro members but women of trading, we, listen, Friday nights, everybody come on board. If you're a male, you need to self-identify as Nancy from Nebraska in the chat, or they will kick you out.
Yep.
So,
And so women in trading is not a pro thing. Anybody can come and join. Just find the events page, click that and launch it, I believe. And, but Mind of a Trader, like we do, those shows we do all week long, the traders lounges. Frank, I know you pop in there and see what the boys are talking about all the time.
I
The
sneak in.
coaches show. It's a no-brainer in my opinion if you're a trader. You know, there's just so much content. Frank, we do a pretty poor job promoting ourselves because we it's a lot.
We rely on the team to do it. Yeah,
Yeah,
none of us are salesmen.
we're not very good at it.
No, I'm a terrible salesman.
But I mean, we got a lot of stuff and we're proud
Oh,
of
for
it.
sure. Absolutely.
And we work our butt off to put out good content, good shows, good courses, and as well as some free and some paid. That's what Tackle Trading is all about. Mark, any last thoughts here heading into Friday? You've got your thing here in 30 minutes.
listen, once the weekend starts, I get heavy on shows. So breaking down lots of analysis practically on how we approach the market. We're doing the at the market bell to do any closing thoughts, any trades, any things we're doing. The trades that I made last week, very happy with where they're at today. I don't know. What I'm going to do at the closing bell here in the next hour and a half. That starts in a half hour. We're going to talk about gold, silver, natural gas, oil in our commodities live thing tomorrow at noon. And then on Sunday, we are going to have the market prep session these shows from Friday to Sunday that we do. First of all, we got a lot of extra time these days, but they have really helped my own personal trading, staying disciplined, coming up with a plan, and hopefully other individuals are getting that that benefit as well. So first one in 30 minutes, we're gonna just finish up this market week, see what we're gonna do head into the weekend.
The markets are stuck in the mud. It's always interesting. Friday afternoons, Frank, are always really interesting to see how these weeks close. I don't make new entries by this time in the week myself personally, outside of maybe a hedge or something like that. Markets, they gapped out. They're holding some of it for now, but we'll see how it goes. Any last thought there, Frank?
Yeah, the battle at the 50 is going to be real interesting. Definitely want to keep an eye on that. Obviously, earnings season is going. We got some real interesting names: Netflix, Coke, IBM, Delta, Intel, Lilly, AT&T, a lot of interesting names coming out. So make sure you are staying on top of that. So no surprises no fun to wake up to a bad earnings surprise that you weren't expecting, right? So make sure you are staying on top of that. And it's going to be fun. These next couple of weeks, we should be starting to see, some, we'll get some information as we work through this earnings season. Looking forward to it.
Yep. And if you joined us for the first time this week, we'll see you back on Monday, same time, 12:30 Eastern Standard Time. Click the subscribe button, click the bell, make sure you don't miss one of our shows. Great job, Cody, to take us out. We are gone for Friday.
Have a great weekend, everybody.